Welcome to the True Commercial Real Estate Podcast, your investor resource for all things truly commercial. Whether you invest in industrial, retail, medical office, storage, single tenant, or any other type of non-residential real estate investment, this is your podcast.
Organizers and presenters do not provide investment advice or endorse any investment or product. All information and materials are for educational purposes only. All parties are strongly encouraged to consult with their attorneys, accountants, and financial advisors before entering into any agreement or investment.
Hello and welcome everybody to a new episode of the True Commercial Real Estate Podcast. This is Aurélien. I'm here with Logan. And tonight we have a special guest. It's our very own Ken Naim. And so I'm going to read Ken's bio and then we will go dive into the questions. Ken has been a member of the group since the very beginning. So we're really excited to have him. So Ken has been investing in real estate for 25 years. He bought his first property shortly after graduating college as a pharmacist. 2 years later, Ken decided that his strong problem solving and math skills would be better applied in IT as a database administrator and developer. Those same skills helped him build up a small residential portfolio with a mix of single family and small multifamily units in 3 states while building a database consulting practice. 3 years ago, Ken started selling off his residential portfolio and made the move to purchasing value-add commercial real estate where he could directly affect the appreciation of a property. Since then, he has acquired a 40,000 square foot industrial building in 2020, a 37,000 square foot office building this past January, and has now started his first syndication where he and a group of investors are purchasing a 25,000 square foot industrial building. Ken's goals are to educate residential investors about the benefits of commercial real estate while building his own portfolio and spending more time with his wife and young children. Let's welcome to the podcast, Ken Naim.
Pleasure to be here.
Ken, what's up, man? I had no idea you were a pharmacist student.
Yeah, I'm a lot of things.
I would say so.
Yeah, I've tried everything.
Yeah.
Oil and gas investing, I've tried.
You're a Renaissance man.
I grew up knowing nothing, so I tried to figure out what the best path is, so I tried Forex investing, option trading, but real estate's definitely the way to go.
Yeah. Awesome. We're going to dive into that. Aurelian's going to ask a few questions. I'll finish up and we'll dive into some of the deals you've done. I'm excited about it.
Yeah. So Ken, sorry, did you take any classes or courses to educate yourself before getting started in non-residential commercial?
I started doing a lot of research online, and in the beginning, I really didn't find a lot of information, but I did find one really good source, Peter Harris. He's the author of Commercial Properties for Dummies, and he has a whole series of YouTube videos, which he later compiled into an online course that he has for free on his website. And so I really went through that, and that really taught me the lingo and the math and how value add real estate really works. Okay. It's a very, very basic level, but it's enough to get you into feeling confident enough to go talk to brokers and start looking for deals and running the numbers on everything. And he covers all the major areas of due diligence and what you should be looking for. He's selling his own products, of course, but I never bought those products. But the free information provided was very good, and it really got my foot in the door and felt comfortable to start looking for properties to purchase.
Cool. And why non-residential commercial? What was the attraction there?
Well, the first property I looked at as a commercial property was a 10-unit. Almost beachfront property here on Singer Island in Florida. And it was 10 units, and it was, I would still have to deal with the same residential issues that I would in a 4-family or a 2-family. And it wasn't really big enough to have a property manager or a good property manager, and I didn't want to self-manage it. So I started looking at other opportunities, mostly office, because I wasn't really comfortable with retail. But then, the broker came to me, says I have a good deal on industrial property, and I said, I'll take a look at anything, and see if I can make it work. And once I started to see the benefits of industrial and office and even retail, even though I haven't done that yet, it for me it's a no-brainer that that's the way to go. Why deal with 10 or 100 or 1,000 residential people when you can deal with 4 or 10 or 20 commercial people? One, it's just less headaches to deal with, and two, the numbers are just greater, so you just don't have, it just makes your life easier.
Mm-hmm. Correct me if I'm wrong. I want to jump in here. Do you find the underwriting easier on an industrial deal than you do on a multifamily deal?
No, the industrial might be a little bit more difficult. There's more variability, and there are less resources to find. Let's say, like finding a true comp for an industrial property is much harder, because how many 40,000 square foot industrial buildings do you have in Sebastian? And I'll tell you the answer. It's one.
Yeah.
Okay. You might have to go to the next city and the next city. And then, like, if you're 5 miles away from the highway versus 6 miles, that can make a big difference in some markets. Okay. Sure. And so those things. Multifamily, you generally know what it's going to rent for, within $50 or $100. Mm-hmm. It's not, even the CoStar comps for industrial might be $6 to $9 a foot. Okay, 50% difference.
Yeah,
nobody's going to tell you, oh, this multifamily will rent 1,000 to 1,500.
Yeah.
It's either 1,000 or 1,100. So I think it's easier, and it's hard to know what the real market is for some of it. Mm-hmm. But that's why, as long as you're conservative in your estimates, you're usually going to be very pleasantly surprised with industrial. And usually your profits will be way better than you expect.
Yeah.
And
yeah, I threw that in there as that wasn't part of our questioning. So sorry for jumping across you there, Aurélien. I just
no.
Yeah.
I'm open to any questions.
Yeah.
So you've mentioned a few categories of commercial. Is there any categories in particular that you like, and if so, why?
I like industrial. I like bigger spaces with fewer tenants. With fewer tenants, you have more risk, but you also have less risk if you do your underwriting properly. Mm-hmm. So, I rather rent 40,000 square feet to 2 or 3 tenants than to in multifamily to rent it out to 40 tenants. So, and I like it because you're giving them a basic shell. And usually they're working people that know how to fix things. So they're, if the toilet breaks, they're not calling you. They're just going to go in there and take care of it themselves, and you don't have to give them, there's no luxury involved. TI is relatively minimal for them. Office is really nice, but the TI expenses can get very expensive, $10, $15, $20 a foot. Or more. So that's why I like industrial mostly. But, with my office building, I have 4 tenants, hopefully 5 soon. And it's, you get maybe a call every other week or something. So it's usually very easy to manage.
Cool. And how do you find deals?
Well, that is difficult. In today's market, everything's so expensive. it is hard to find deals. But I found that it's very hard to exclude something, even something that's on market as a potential deal, just because it's listed at market price and it's out there. It doesn't mean there's not a deal if you're creative enough, or if you have some good idea for it, or if you make the right offer. But I primarily have found deals through finding good brokers, and not just any commercial broker, but really good ones. Okay, you have to find the ones that's closing the big deals around you, okay, and small deals. If they're only closing $30 million deals, they're not for me. But if they're closing 1 and 5 and 30, that means they have access to listings, they have access to markets. People call them up with stuff that they don't necessarily want listed, and you might be able to get a first bite at the apple, especially if you develop that relationship with them. You call them every week or two, what do you got, and you have to develop that relationship where they know what you want. And if they know what you want, when something comes across their desk, they will call you. And once you close one deal with them, you'll get a lot of stuff from them. Mm-hmm. And once you close the deal, I just found this out the other day, in a certain market, you're going to start getting calls from other brokers in that market that have similar properties like that. They saw my name on the tax records, or my LLC on the tax records. They skip trace and they say, "Oh, you bought this building over here. Would you be interested in there?" So it's kind of just like a snowball, and just keeps getting bigger. As you get a little bit of a name, you get more calls and more calls from people that have more deals for you.
Yeah. That's awesome. No, from a broker's perspective, I couldn't agree more. I mean, it's especially when you close a deal finally, it's like, hey, I know this person can close. I'm putting them on the short list of people who are going to get this deal in front of me first. And that's absolutely accurate. And to your point, we do it all the time. We're calling. One of the first questions I ask when I get on the phone with someone who owns a property isn't, hey, do you want to sell your property? It's, what are you looking for? Are you looking to acquire more property? First of all, it's kind of a value add, right? You're giving them some value, and it just opens up that conversation. But secondly, every broker wants to have a Rolodex of people that want to buy certain asset classes. So I know when this comes up, I got to call Ken because I got something for him, so I think it's great advice.
Yeah. And as long as you can be specific, everybody is in this business to make money, so the worst thing you can tell a broker is, oh, I want something that's going to make me money. You want to tell them, I want industrial. I want it between 20 and 40,000 square feet. I want it, single tenant, multi-tenant, I want acreage, or I don't want acreage, just be as specific as possible.
Yep.
And if your needs change, let them know that your needs change. Like in the beginning, I wasn't looking for industrial because honestly, I was just uncomfortable with it, And then I said, you know what? Well, I could do industrial, I can do retail, so if something comes up, and especially like you said, when you're calling people that own property, they've closed on deals before. So that they're potentially good buyers as well. So
absolutely.
And so it's a question that wasn't in the list, but so for newbies, people starting out in investing in commercial, do you have any tips in terms of due diligence and things to look for when we're looking at a deal?
Due diligence is the hardest part of the deal. It's definitely difficult the first few times. So, but the first few times, don't buy super distressed properties. You want a little bit of distress, either some financial distress, some vacancy, some physical distress to the property, but don't buy a total gut check. Okay, don't buy something that's totally vacant, or that you can have so many things go wrong. Anybody can hopefully deal with a few things going wrong, and it will, but you don't want something that has 100 ways to go wrong and only one way to go right. So for due diligence, get one of the checklists that there's so many of them online and actually do the items on the checklist. Call the county, see if there are violations. Don't just trust the title company.
Yeah.
I trusted the title company, and later on I found out that there were no official violations, but there were unofficial violations, and they were waiting for the new owner to give the violations to, because they knew the old owner couldn't handle it at the time.
Nice.
Some cities are very good old boy networks, where they won't find the guy that's owned it for 40 years, but the new guy comes in, oh, he must have money. Let's find him like crazy and give him all these violations. So it's good to make the phone calls, go in person to the city hall, call up the different utility departments, make sure to get as many quotes as you can during due diligence. You don't have to use those necessarily, but don't assume that you know how much something costs on an industrial property or an office building. Office prices are way higher than residential prices. Industrial prices, just because of the sizes, they're unbelievably, like, how boat stands for break out another 1,000. In industrial, it's 100,000. Any quote, 100,000 for this, 100,000 for that, 300,000. You don't get something for 10 grand. So it can get very, very, very pricey. So, run your numbers, know how to calculate them, and that's a lot of area where a lot of people are on the weaker side and don't trust your gut alone, trust the numbers and your feelings. And if your gut says run away, run away.
Mm-hmm. Good advice.
Yeah,
Definitely good advice.
And so in terms of financing, do you have any best practices you could share with the audience?
Yes, and I've actually learned this recently. I thought going to a mortgage broker was the best process because they send out your information to 50 different companies, and they see which ones are interested, and they go through the process with all of them. And I was in contract to buy an office building not too far from me in Boca for $6.8 million. And even though I got the initial approval from the bank, once it got to committee, it wasn't approved. Okay. And it had nothing to do with me. It had to do with the building and their short-term leases. And I had to back out of the deal because I didn't have time to find another deal. And it was so impersonal because everything's going through the broker, and the broker has to contact the underwriter. It's all this back and forth. And everything that you tell the broker gets repeated to the underwriter. So you have a little bit of a broken telephone scenario over there. So I found out that you want to find a bank where you can deal with a person, where you can meet with him. You can go with him and his boss to lunch, and you want to show them that you're a good person, not just a good investment, because they want to deal with good people. They don't want to deal with problematic people. They don't want to deal with, with risky people. So if you show them that you're a good person and you have a good deal, you're not only likely to get this loan funded, but you're going to get your next loan and your next loan. Because once they realize that, just like brokers, they realize that, oh, you're going to close this deal. Banks look at it the same way. Oh, we loaned them $2 million today. We're going to loan them $2 million a year from now and the next year. And, and they like that because now you have a history with them. And once you close one deal with the bank, it's much, much easier to get approved for all your subsequent deals. Mm-hmm. And even if it's a small bank, a lot of them, as long as you're their customer, they'll underwrite any deal in the country. So you don't have to have all your deals local with them, even if it's a local bank. And that's all stuff I learned in the last 6 months or so. Mm. So, and sometimes the best rate is not the best deal for you. It's better to pay an extra 10 basis points with the bank that is going to approve you than to be sitting on pins and needles for 30 days, 45 days during due diligence and not coming back with an approval.
Yep. That's great advice. Fantastic advice. I've talked to so many bankers who have said, small local banks who say, you know what, we may or may not like the deal, but I know I'll get my money back from you or whoever they're talking to. And they have that mentality. Like, I know Ken and I know Ken will pay me back. So we're going to do the deal. And that's a whole
their
different
most
ballgame.
important thing.
Yeah.
Especially for rates, in the 3s and 4s and 5s, they don't have a lot of margin for deals for people that don't pay back their loans. So, they really want to trust the person.
Mm-hmm.
And there's only so much you can trust over email and, even a Zoom call, but if you can meet them for lunch, it really helps. A good handshake, says a lot about the person.
Yep. You go to the same gym as them. Maybe you get coffee at the same place, whatever. You see them out in the community.
Yeah. You give them a referral. You put them in touch with your broker. You put your broker in touch with them, and they start feeding each other deals, and they appreciate that. And that's going to come into play when you go for your next loan.
Mm-hmm.
When that broker refers somebody to them, it's all a network. And for a person that did residential, and residential you can do by yourself. I did that by myself for 20 years. And you don't have to build a network to find a residential deal on the MLS. You don't care who the broker is or who the banker is. You can apply online, get approved online. You don't need anybody. But to really succeed in the commercial space, you have to have a network of people. You need a real estate agent, you need a broker. If you're into, large number of tenants, either multifamily or offices with 20, 25 tenants that you don't want to manage, you need a good property manager, So you need that network. And, if the deal is too big for you, but it's a good deal, you need a network of investors with you.
Yep.
And for all of that, you need reputation, you need to be trustworthy. So, I never understood how your network is your net worth. But since I got into commercial, I just realized how true that is.
Yep. That's great advice. Great advice. We're going to shift gears a little bit here. So we've been talking about some general advice, but we want to dive into a few of the properties that you've done recently. Starting with the industrial property you did, this Florida industrial building that you bought. I believe it was vacant when you bought it. Kind of give us a little bit of a rundown, starting with how you found it and how you came about buying the property.
So the broker that I was talking about, I've been in contact with him probably for about 6 months at that point. We had looked at that 10 units residential building. We had looked at a couple other things that just didn't pan out. The residential one's the only one we got into contract, but some other ones we just looked at the numbers and they didn't work. But COVID hit in March of 2020, and it was getting really bad. But I thought, this is only going to last 2 weeks, 3 weeks, at most, and then everything will go back to normal, similar to other things in the past. Little did I know how wrong I was. But I told him there's blood in the streets. People are selling things cheap. I want to buy something, while everybody else is panicking. Okay. So he goes, I know you're not looking into industrial so much, but I have this industrial property. So it was a 40,000 square foot building in Sebastian, Florida. The seller had just bought it just maybe a month before, okay? And he was so worried about COVID that he decided to, instead of rehabbing it and selling it or leasing it out and selling it, he was just going to sell it and make a quick flip, take his profit and go. And so they already had a phase one on it because the previous buyer did the phase one. So I knew it had a clean phase one. The the original seller, so not the first one, the original one, tried to refinance it previously about 6 months before and got denied, and that's why he sold it for cheap. So he already had an appraisal, and that building appraised for 2.1 million in its current awful condition. Okay. And my negotiated price was 1.275 million for it. So I knew there was value there, even if I couldn't sell it at 2.1, I could sell it at 1.8, So I knew there was value there. And you mentioned that it was vacant. It was worse than vacant. It had 3 different squatters in the building.
Nice.
Okay. So, and they were supposed to move out within a month of closing, but then they didn't move out. And then they said, oh, we're going to do another month, and we were promised this and we were promised that. So I had to hire an attorney during COVID to get them evicted. And there was a ban on evictions for a little bit, but eventually I got them evicted. And that's the other thing for newbies. Buy in a state that's congruent to your interests, okay? In Florida, you're not paying, you don't have a valid case against the landlord, you're out, especially in the commercial space, which is the other reason why you don't want to have residential tenants, Residential is a place where they live, if you kick them out, they might have to go onto the street, or at least that's what the government fears. So they're always going to be a lot more lenient with residential tenants, even in Florida. But, with your business, they don't really care so much. If you can't afford the rent, go move somewhere else. So we were able to get them out about 2 months, 2.5 months after closing, which wasn't too bad. And luckily, Florida evictions aren't super expensive either. Excuse me. Sorry about that. Where was I? So,
you got them evicted.
And it was in distress. The cement yard, which was about 2 acres of parking, was all torn up. The building was 40 years old. It was a former Ford wire and cable plant. So they used to make wires and cables. Then it got bought by an aviation company. And then the squatters that were in there were all boat and surfboard manufacturers. So Sebastian's well known for its surf. And boating. But so we had a lot of work. We had to redo the paving. We had to, there was about 30 containers worth of trash on the property and in the warehouse. And apparently that was much better than it was several months ago when they appraised it. Okay, because the owner had started to clear out some of the stuff. So that just gave me a little more confidence that I can get a good sales price for it.
Yeah.
Now, obviously, in this condition, no bank would even touch it. I had to close quickly. I think I closed in 3 weeks with a hard money loan. The seller was getting anxious I wasn't going to close. So I said, okay, if I close, I gave him like 30-day terms to close to begin with. And he was getting antsy after 2 weeks. So I said, if I close in a week, will you take off $50,000 off the price? And he gave me $25,000 off the price. And then at the end, I got another $25,000 off because it was supposed to be cleaned out by the time I took over, but it wasn't. So they gave me a $25,000 credit for the cleanup. So
nice.
I bought it for 1.225 million. And then we did a ton of work on it. We fixed all the holes in the metal building. We painted it. We fixed some roof leaks on there. We eventually we paved the parking lot. Paving the parking lot, initially we were getting quotes about $200,000 or more, 250, 180 for half of the parking lot, and it was just crazy. And so we were trying to sell it without doing the parking lot, and it wasn't really going so well. But then again, COVID was really slowing everything down. You know, we were getting so much interest, but people couldn't fly down to see it. So around November, I finally did the parking lot. I found a different contractor. He came by referral. Again, network was very important. Found this awesome guy. Did it for a little over $100,000, which is, you know, $100,000 less than my next quote. And he did the whole parking lot, not even half of it.
Nice.
You know, and what else did we do? Obviously, we cleaned up everything, which was, I found this scrap metal guy that was nearby. And I told him, if you pick up the scrap, you know, you can take it, you know, for free. This way it doesn't cost me anything. You guys get to sell it. Yep. You know, usually you have to drop it off and they pay you. So I said, don't pay me for it, just take it, you know. They said, oh, if you want us to clean up everything else too, we can do that. Just pay us, you know, this much per container. And it was a great deal all around. Yeah. They were slow because of COVID. They were happy to do the work. You know, it worked out really well.
Awesome.
What else did we do on it? We did some electrical repairs. They had so many old panels that weren't really connected, and that was one of the violations the city had. So we had to get some electricians in there. There was a broken window. There was some sheetrock missing in one of the offices. You know, just
stuff.
A lot of mundane stuff. You know,
yeah,
$1,000, $5,000, $10,000, $100,000. You know. And at the end, it cost us about $400,000 to rehab the place. Wow. And it still wasn't perfect.
Yeah.
That's a nice thing about industrial facilities. They're functional places.
Yep.
You know, it's not like an office building where people want it to look, you know, pretty because, you know, people want to work there and, you know, they're trying to display a certain image of a certain company, depending on how high level the company is. Like you can't rent an office to, you know, like any major corporation unless it's, you know, gorgeous, you know. Industrial facility, do we have 3-phase power? Okay, how much power do we have? How much square footage do we have? What's the ceiling height? You know, are you on septic or sewer? Oh, that's another major thing for industrial. Find out if they're on city water and sewer or septic. That's something I didn't realize was important. And because we're on septic and well water, we had an issue that the building didn't have fire sprinklers. And to put fire sprinklers in, $100,000, not too bad. But because we weren't on city water, we didn't have enough pressure to supply the sprinklers for the amount of time that they needed. So we would need to get, I don't remember the number exactly, but like 100,000 gallon tank, which is another $100,000. Okay. And we need to get a fire pump for it, which is another $80,000 or $100,000 plus engineering and all that stuff and permits. And then you do all this, and then the fire department comes and checks it out. And if it's still not exactly meets their requirements, then you have to go ahead and redo this. So luckily, we didn't have to do that. But it can get tricky. So make sure the building is sprinklered and it's on city water and sewer, ideally.
Yeah.
How come you didn't need the...
If not, price it in.
Yeah.
What's that?
How come you didn't need the sprinklers? Is there a specific reason the building...
No. Well, as long as we didn't have a change in usage, technically we were grandfathered in. But we basically told the buyers that it didn't have sprinklers, and it would be on them if they wanted, if they would want to do it, and if they were required to do it, they had to. But we were upfront about it with, and And depending on the buyer, or if our goal was to lease it, because the lease rates for this building were 20 to 30,000 a month. It would have been super profitable, triple net, if we had leased it. And we had a Canadian company that was super interested in leasing it, but they were so slow to come back to us because it took them a while to get their new business in the US set up. And literally like 2 weeks after we're in contract, they come, okay, we're ready to lease. And we go, I'm sorry, we can't do it. We just signed a contract 2 weeks ago. If you told us what you were waiting on or something. And we even offered the buyer to like give him $100,000 to release us from the contract so we could lease it to him and all. And he really wanted the building for his bicycle business. After we were in contract, we also got 3 higher offers, way higher offers for the building. So it's just like COVID was starting to taper down a little bit, and then everything started to flow again. So it took us, because of COVID, it took us 14 months to actually get the project done. Quotes took forever. Then to get people to actually come out and do the work took forever. They would say, okay, we're ready to do the work, and then they would get COVID, so they would be out for a month. It was a challenge, but ultimately very profitable.
So you bought it for just over 1.2. You had it for about 14 months. And what was the final selling price?
We sold it for about 2.6. I paid the broker, I don't know if it's above average, but I think it's above average commission. I basically pay 7% on any deal. Okay. And, these size deals, you can probably negotiate a little lower nowadays, but I don't want to. I want to pay the broker well, because I want to be the first one that he calls on his deals in the future. So I don't pay him on the buy side. So I make sure that I give him whoever, in this case, I've gotten all my deals through him, but I want to make sure that I give him the sale if he brings me a good deal on the buy. And I want to make sure that I pay him more than most other people would. I've spoken to a lot of brokers, and they say, oh yeah, they negotiated me down to 3%, 3.5%, 4%. And I go, I want to pay them more. I want to get more of these deals, not less of them.
That's awesome. Awesome.
So ultimately, we made about 70% on our investment, even with the hard money, even with we budgeted $300,000 for repairs, it came out to $400,000, and we still made 70%. And if we hadn't accepted that offer for 2.6, we were getting 3 people that were practically bidding on it for over $3 million at that point.
Wow.
The
beauty of commercial real estate.
Yeah, and it's funny, like, it was on the market since December, and, for 3 months, and we had one deal fall through. This guy he was buying it, but he was trying to lease it at the same time, and he didn't tell us. He told us it was for his garment business, and he was trying to lease it, but he wasted 45 days of due diligence, just trying to lease it, and he couldn't lease it, and then he backed out. So that was just frustrating.
Sure.
So I don't mind if you're going to tell me that, but but so.
Absolutely. So I want to be cognizant of time. We've been talking to you for about 40 minutes now. I don't want to take up all of your time. We still got a few to get through. So I want to jump into this office deal. You've got an office deal that you closed on in Florida as well. Kind of walk us through. I believe it was the same broker that brought you this deal, I imagine, right?
Yes,
okay.
Same broker.
Awesome. So what's the rundown on this deal? What did it look like? Was it vacant? Were there tenants? What'd you buy it for? Give us the background.
This is kind of the opposite of the warehouse deal. This is a Class A office building it's in an office plaza in an office district. So there are buildings across the street, down the block. AAA headquarters is down the block. And they have buildings where you can lease hundreds of thousands of square feet in those buildings. But this one was a smaller building, 37,000 square feet, 3-story, Class A building, very nicely done, almost no deferred maintenance. The parking lot was about 12 years old. It needed to be just recoated, but nothing like Sebastian, where it was all torn up from 40 years of heavy machinery. But so we're not expecting to do a whole lot of renovations here or anything. And the seller was frustrated with the building because he actually bought it from somebody that bought it in foreclosure, and he had to deal with a lot of the deferred maintenance. He had to replace the air conditioning units, he replaced the roof, and they had a lot of HVAC problems in the building for years. And I don't know what his profit was or anything, but I don't think it turned out to his hopes. So he just wanted to get rid of it now that he solved all the major issues and everything. So he told the broker that he was looking for around 7 million for the building. Okay, which at 7 million, it was about a 7 cap, 7.1, 7.2, depending on how exactly you run the numbers. So it was a fair deal, you know.
Sure.
But the distress in this building was that it was 14% vacant. They had one suite that was vacant. That suite wasn't in bad shape, but it wasn't in great shape. It had some odd colors that maybe a new tenant wouldn't like, and the layout is not ideal. Okay. Now, for some companies, it will be ideal because they had a big call center area. They had a couple of studios for recording, and it was interesting. But at a 7 cap on existing NOI, it's kind of like you're getting that 14% or 5,000 square feet for free. Okay. So when you do the pro forma and you figure out what the rents on that would be, you know, you could add another 150, 200,000 to the NOI to it, which just increases your price exponentially.
Yep.
So it's worth another 2 million, another 3 million. And all you have to do is find maybe 1 or 2 tenants to take up the space. Obviously, you're going to need to spend money on TI. Like I said, you know, the tenant that's looking at it now, we're going to be spending about 150,000 in TI if we sign the lease. So it's not cheap. But if it all works out, you know, we can increase the price by like $2 million.
Wow.
So it has a lot of potential to it. Now, the projects that we're doing are basically landscaping, paving. We're replacing the fluorescent lights to LED lights. That's a $40,000 project, but we're estimating it's going to save us $2,000 a month on electric. Okay.
Wow.
Yeah, and that $2,000 a month is $24,000 a year. You know, at a 7 cap, you know, that's another $250,000 in value.
Yep.
So,
good cash on cash return, and that increases your value.
exactly. So, and it's cash flowing as is, you know, with the vacancy and none of it, it's cash flowing $10,000 to $12,000 a month. So, and that's because of just the 14% vacancy. 14% doesn't sound like a lot, but that's the difference between, you know, a $7.5 million building and a $10 million building. That's the difference, you know, the LED project, you know, if the seller would have did it beforehand for $40,000, and I'm using the vendor that quoted him on it. So he had the opportunity. He just was so tired of the building, he didn't want to spend the 40 grand, you know.
It was just done. Yeah.
And that's what you're looking for value add. You're looking for people that are done with their property.
Yep. Well put. Very well put. I think that's
for whatever reason, you know, they might have 100 different reasons for it. As long as they're done with it and they just take it off my hands, you know. He was a tough negotiator. He told the broker he wanted around 7. I offered him 7 because I saw the potential in it. And he goes, no, I want more. I said, okay, 7.25.
Yeah.
And he said, no, he wants minimum 7.5. So I went to, okay, 7.4. Now, 7.5, fine. Okay.
Yeah.
And, you know, and then we did the inspection. We found a few minor issues. We tried to negotiate a little bit, get $100,000 off. Yeah.
Yeah.
But
Yep.
still went through with it because it's still a good deal,
Yep. Yeah, that's such great advice. When you mention you want to find people who are done. I mean, I think there's so many people, especially new, who are looking into this, who are reading the information, they're listening to podcasts, they're listening to what's a good cap rate, what should I be looking for? And if you just scrolled through and you're like, hey, I'm looking for something, that's an 8 or 9 cap or whatever, because I want cash flow, and they saw a 7 cap and just passed it up. You're not digging into the numbers. You're not understanding that person's pain points. You're not understanding that there's vacancy, that there's value add. The adage that, there aren't a lot of good deals out there. You have to make good deals, I think is just totally applicable for both of these deals that you've done. Like, so many people could have looked at that vacant industrial building and said, this thing's a dump. It's going to take a ton of money.
Yeah,
but you found
it's
that
dump. It's going to cost a lot of money. There are squatters. It's, it's going to take us forever to lease. There's COVID, nobody's going to finance it. I had 100 reasons to walk away from that.
Yeah.
But, once I saw that it was worth $2 million in its current state, and and all the comps show that it could be way higher than that, and we really couldn't I was mentioning it before, we really couldn't comp it properly, So we listed it, I think, for 285 just to see where the market was, and then we got 2.6, and then we got 2.9, and then we got 3. They were too late for us to take advantage of it, but it's still, we bought a $1.2 million property that was worth $3 million in the right condition, and not even perfect condition,
Yep. And that's not the stuff you see by scrolling through Crexy and LoopNet, right? You have to dig in and do the homework that you did on each of these properties to really understand the value. So
and that's why, like, people say, oh, do you think this deal is good? Like, and they show the OM, or they show the Crexy or this, and I go, I don't know. Any deal can be good if you dig into it. If you just pass it by, and obviously you have to pass by. You can't look into every deal you see.
Sure.
A day. But so you just have to try to get a glimpse if there's potential, and don't say, oh, it has to be occupied. It has to be this, maybe the leases are up for renewal in a year, and maybe the market rates are much higher. There's so many things that can change. And that's the big difference between commercial and residential. There is so much variability in commercial because there's so many levers that you can play with. Condition and quality of tenants, length of leases, and different things like that. In the multifamily space, it's like, okay, every lease is a year, or 2, maybe, like 1%. The market rent is the market rent. You really can't really affect it a whole lot. You can't over renovate because you're not going to get your money for it. But in the office space, in the commercial space, you can get value, you can create value, and that's very hard to do in other places. Where can you force appreciation? The only place I know about it is commercial real estate.
Yep. No,
you can't buy a stock unless you're Elon Musk buying Twitter.
Yeah, right.
You can't force appreciation.
Yeah. I can't send a tweet out and make a stock go up or down. So, I don't have that power. But anyway, so these 2 properties, I'm assuming you still have this property. You're keeping this property, right? And you're going to run this long term, or what's the plan there?
With value add real estate, it doesn't really make sense. If you're truly a value add investor and not a buy and hold investor, it doesn't make sense to hold properties long term because you're buying a property and you're looking to make 20, 30, 50, 100% on it, whatever your numbers work out to be. But once you create that value, and now this $7 million building is worth, let's say, 10 million, 11 million. Okay, you refi it, you get 65, 70, maybe 75 to value, but you're still leaving $2 million in equity on it, okay? And now your cash flow is going down because you have a bigger note, okay? And so now you're making 8%, 7%, 9% on this property, on your equity. So your return on equity is low. So if you're a value add investor and you're targeting, like I'm looking for better than 20%. So why would I hold on to an asset that's giving me 9%? You know?
Yep.
So now I'm hoping in the long term, I will build enough assets that I can have some buy and hold for the tax benefits and the depreciation and all that. But while you're in the accumulation phase, it makes a lot more sense to buy it, get the most realistic amount of value that you can in the shortest amount of time. Like this building has a lot more potential, but it would take so many years until the tenants leave and to raise their rents and everything. It's just not worth it. So if we get 80% of the value in a year, you know, and we sell it and we get, you know, an 80% profit in a year or even 30% profit in a year, that's just awesome.
Yeah.
And then we just move that into our next project and our next project.
Yeah.
Now, once you get to a point where you're not so aggressive in accumulating, you have some buy and hold for the cash flow, depreciation, all of those benefits. And then you have a separate portfolio of value add if you're still interested.
Awesome. Solid plan and solid advice. So, you know, those were the two that we wanted to do a deep dive into, but I do know you're working on one more right now. You've got another industrial deal in Florida that you're doing a syndication for. And this is, I believe, your first syndication. Is that correct?
Yes, it's my first syndication. I really recently had like I was mentioning earlier, my mind open to how important your network is. So I came across this deal, 25,000 square foot light manufacturing facility in Ocala. It's distressed a little bit, you know. It needs very similar to the other one. It's going to be vacant. It's going to it needs paving. It needs some roof work. It needs just some general TLC painting, you know. And the seller was distressed. Okay, he had a lease option to buy. He's getting divorced. His wife left him for the pool boy, you know, literally. And
wow.
You know, he was in a car accident a year ago. Whole sob story. Okay. So he came to the broker and said he wanted $1.25 million for it. So I ran the numbers. You know, the place is probably worth $1.5 million as is. You know, maybe after renovation, more than that. But I ran the numbers, and especially as a syndication, there wasn't enough meat on the bone for everybody. Okay. So I told the broker, just list it for him, you know, he'll make more money that way, you know. And so I completely forgot about it. The broker went back to him, told him he's not interested. He says, okay, how about for $1 million? Okay. So I looked at it. I told him the best I can do is $850. Okay. We agreed on 9 and we were in contract, you know, quick close, 30 days, due diligence, 15 days to close. It was going to be a hard money deal anyway. And I had confidence in the hard money guy that I used previously for the warehouse would give me the loan. So I wasn't too concerned about that. In the meantime, I'd contacted a bunch of other hard money lenders, but they were all either more expensive or their process was too much of a pain in the butt to really warrant going with them.
Yeah.
But this is where I just bought this office building 2 months previous to that. You know, it's not a ton of money, but you know, I just didn't have the money for the down payment and the renovations, and you know, I didn't want to leave my other project undercapitalized because I know I need 150,000 for TI. I knew I was negotiating with this, and what if something major did break over there? You know, you need to have reserves. So I brought it to a group of investors that I've been working with for about 6 months, and I told them about the deal. And from the group, 6 people decided to invest with me, and my lawyer and my friend decided to invest with me as well. So we have 8 people between 50 and 100,000 each, for a total of 650,000 being invested in. Taking a $600,000 hard money loan on the place.
Mhm.
And if it sells at 1.5 million, we're at about 20% return to the limited partners. If it's
Awesome.
1.6, it's 30%. And honestly, I'm hoping to do better than that. So
That's awesome. That's awesome.
now
Phenomenal.
we ran into some complications this week, so this deal might fall through last minute, but that's the risk in this business.
Yeah. Yeah.
You spend time, you spend effort, you spend money on inspections and phase
Mhm.
ones, and I had to put a commitment in with the hard money lender, and I'm paying the syndication attorneys, and if it all blows up, it blows up. But in this
Yeah.
business, you're hoping for big wins and small losses.
Yep.
There's no scenario where you have no losses. So as an investor, just be ready for that.
Yeah.
You are going to look and do due diligence, and it might cost you $2,000, $5,000, $10,000, $20,000.
Yeah.
But if the deal works, you'll do very well. And every once in a while, you take a small loss here.
Yeah.
Just make sure you don't make big losses.
Yeah. This is such an awesome interview because I know about back when we started this, it was around, I think, December of 2020, this group that we have, this meetup group. And that was right when this was all happening. Right. So we've gotten to see this whole progression of your commercial career. And it's inspiring to me. I think, for anybody who's been, aspiring to get into this, it's inspiring to them. I mean, so just looking at that over that 14, 15 month stretch, all of this has happened. So, I think, do you have any advice for new investors who might be looking at this as daunting, like something they can't do? Just what advice would you give to them?
It is daunting, but it's not hard. Okay. Real estate is not a difficult business. There are millions of real estate investors. It's not rocket science. You don't need a PhD. You just have to be willing to learn, and you're willing to work for it. A lot of investors, they don't go out and see their properties. They don't. I drove to that warehouse 100 times. Give or take. And it was 100 miles from me. So it wasn't. Oh, I'm going around the corner here. So it was gas, and it was time, and meeting with vendors. And if you want to succeed, you have to put in the effort. It's not an easy business, but it's not intellectually difficult. Looking for something that's worth more than it is. You're looking for something that's going to either lease out or sell for more. And, and you just have to hire the right people and get the right quotes. And, it's, like I said, not hard, just requires a lot of effort.
Yeah, that's awesome. That's awesome. We're going to open it up for anybody who has questions in the audience. So anybody who wants to shoot some questions across to Ken, feel free to shoot them across.
So there is a question from Jason. Where did you find your hard money lender?
I actually found him from the same broker. And the referral from that broker is one of the reasons why I got approved for it. His hard money lender trusts the broker, and when he said Ken is good for it, that's pretty much all he needed for it. I did put down a big down payment. I put down $700,000 on $1.2 million place, so he was confident about that. But he always asks the broker about his opinion for any deal that he's loaning. So this is, again, another situation where the people that are important. A lot of the other hard money lenders, I didn't really have a lot of bargaining power with them because they don't know me. They don't know my reputation. I'm not like super well known out there. Because like you said, I'm just starting out in this. But now with the second deal, I was talking to him. Instead of giving me 12% and 2 points, he offered me 10.5% and 2 points. And that 1.5%, even on a $600,000 loan, that really adds up.
Nice. That's awesome. That's awesome. So you're seeing that even, not just from the small local banks where they start to play ball with you a little bit better, but even on the hard money side.
The hard money lenders have a problem that they have cash that they are not loaning out. And for them, it's just really burning a hole in their pocket. They want to loan it, but they're even more concerned about loaning the money than banks because they're actually loaning their own money, you know? So they're being pulled both ways. They're trying to be conservative and only loan it to people that are good risks. At the same time, they're in the business of loaning money. So if they don't loan it, they're not making any profit. So you kind of have to assuage their risks even more than the banks, but usually they require less paperwork, so you have to be able to really show value black and white for them.
Awesome.
Some banks will take a risk on you, if they have a good feeling about a property,
And for the question here, are you all in full-time real estate investor?
No. I built a small database consulting practice. When I say small, I mean literally just me over the years. I used to have maybe one or two 1099 contractors for special projects, but that was my primary source of generating income that I then used to invest in real estate until the real estate could take over. I'm hoping to not do the consulting anymore by the end of this year. Well, hoping is the wrong word. I'm planning on leaving my consulting business by the end of the year and doing real estate full time.
That's awesome. The dream.
Yes, exactly.
You're living the dream, which is awesome because, as we said, this started 2 years ago. So that's incredible. So anybody listening to this, or a year and a half ago, so that'll be a 2-year time frame, right? From the time where you first started investing to the time where you're going to be doing it full time.
I signed the contract in April of 2020, my first commercial deal. I started researching it and preparing for it beforehand. The other thing I learned more recently, I thought you needed a ton of capital to do commercials. I sold off all my retail units to build up the capital for it. But recently I've learned in the last 6 months or so, that is not true. You don't need, $1 million, $2 million for it. Now, if you have it, it helps, okay? But, there are lots of smaller deals, 500,000, 600,000, where you can put down 20% for that. So it's not a capital-free business, okay? Even though it's technically possible, but, a little bit of capital really helps, but you don't need to go after a $1 million deal, a $7 million deal right off the bat. You can find many, many good investments for way less money.
Yeah, what I really like about your story is we see that it's really impressive how easily you go from one category to the other. Office, industrial. And you've learned so much by doing it, by actually, working on deals and getting properties under contract.
A lot of people like niches, I only do office, I only do retail, and that's not a bad thing, okay? You can become a real expert in it, but different parts of the real estate market go through different cycles, and sometimes things are so expensive and other things are so cheap. Like just 6 months ago, office was so cheap relative to multifamily or relative to industrial properties. Industrial properties are through the roof. It's so hard to find, industrial property at a decent price today. And 6 months ago, you could find offices for 8 caps, 9 caps, and all that. It was just, I like to go where the deals are, if it's in retail, go for retail, buy something out of favor, why buy a 3.5 cap when you can buy an 8 cap, the skills are not that different, you're still looking for tenants, you're still renovating a physical building, you're still signing leases. Yeah, the terms are a little bit different, but that's what you have lawyers for. That's what you have brokers for, you know. And if you find yourself a good broker that is knowledgeable in these areas, they can help educate you, especially if they know that you're worth their time.
Very good advice. Yeah.
Very well said. Yep. Awesome. I don't think we have any more questions on the board. So, Aurélien, you want to take us out?
Yeah, I think we've had a fantastic interview. It's over an hour. Thank you so much, Ken, for
My pleasure.
being a part of this, and thank you, Logan. And so we'll tune in next month for another episode, and we will be discussing blockchain.
Yep,
Oh,
absolutely.
wow.
Yeah, blockchain and how
Look-
that applies to raising funds for real estate.
I'm looking forward to that. I'm really interested in that, and I just don't know a whole lot about it.
Yeah, should be fun. Should be fun. But as Aurélien said, thank you, Ken. Thanks everybody for listening, tuning in, and hope you learned something.
Yeah.
Thank you.
All right, everybody, take care.